Hi, Adam.
Hi, Dale. How you
Good,
doing?
buddy. How are you? Thanks for coming back. I look forward to the beginning of the months now because we get to hear some of your ideas and what you're seeing seasonally, and always appreciate you taking the time to visit our community. You know, we've grown about fourfold in the last 7 months, and I'd like to thank you because you've driven a lot of traffic to LAR, and your analysis is top shelf. So I remember last month you talked about the seasonals being positive in the yen, and for a while I didn't think it was going to come to fruition, but the end of the month definitely rallied right into the end of March. Actually had
Yeah.
a guest on yesterday who said the seasonals in the yen turned negative in April. I don't know what he's looking at, all the way into October. What are you seeing this month?
Yeah, we were talking about dollar yen, just to be
Yeah,
clear, not yen, and it picked up. We talked about it at the start of March, and it was a nice rally through the early part of March, and then it sort of kicked lower, and then finished the month again strong. So it was up a little bit. But if you look towards the next month, dollar yen really isn't the story of April, and April is a very strong seasonal month. It's probably the most exciting month of the year for someone who wants to trade seasonals.
okay.
So we got some different ideas on that this month, and really the overarching theme is dollar weakness. It's when the dollar bears come out of hibernation,
Wow.
so to speak. So dollar weakness is going to be one, and commodity currencies. I don't want to get too much into it, but it's really an exciting month for commodities, and I brought some charts with me, and we can recap some of the things we talked about last month as
Yeah, I
well.
mean,
It
after
wasn't we
this
talked about
over
dollar yen.
$115 or so decline in gold from the recent highs up there at 1390, it's looking like this could be a decent entry for at least a retrace of that decline. Is that part of the
Yeah.
commodity scenario?
Yeah, well, if you talk about seasonals, March was the worst month on the calendar. It is the worst month on the calendar for gold, and that proved
Wow,
true
that was,
once
yeah,
again.
that was a big one.
Yeah, I think it rallied through the start of the month a little bit, but it sure has turned around. And today is a nice bounce, but it broke a lot of support in the last few weeks. I mean, seasonals are one part of the toolbox, and when it cut through the 200-day like it did, and it cut through 1300, it wasn't the greatest
Right.
sign. We'll see how this bounce goes. Again, seasonals, you have to watch the news as well, and Ukraine has settled a bit. And that's a big part of the gold story there as well. But there's some good news today as well. India's continuing to relax import rules, and if you allow the 1 billion people in India to buy gold, I mean, what would you rather own, rupees, or have your money in an Indian bank, or have some physical gold? And I don't feel as though, or I feel as though there's enough people there who don't trust the government that will be marginal buyers of gold over the next 5 to 10 years.
Yeah, that's a good point. I didn't even wasn't even aware of that law being changed. They're traditional buyers of both gold and silver. They've been through many more currency devaluations than U.S. citizens.
Yeah, I mean, there's just not the level of freedom there, like capital freedom. So anywhere where that's the case, you're going to see that demand for gold. Why don't I queue
Sure.
up some of the slideshow here? Let's see if I can get it on the
I like
screen,
the brick in
and
the
then
background, and I also
yeah,
like your wiring under the desk there.
wiring under the behind, yeah, back
Yeah.
there. Oh, thanks. Yeah, this is a trading. It's in old Montreal here. It's a new trading operation they're setting up.
Wow.
So
Yeah.
I'm here, and happy to have a little bit of company here. It's quiet at the moment, but it's a great spot. It's some old Montreal. It's just a beautiful place. Not that I work for the Port of Tourism or anything. um, so let's cue that up. Let me just see how we can. I'm just drawing a blank on how to do this, but just bear with me for a moment here.
So
Slideshow.
the dollar bears are going to come out.
The D- Yeah, and you try to find a fundamental picture for that, and it would really have to be, weak data coming up, and we'll see what happens here. But last month, one of the big ones we talked about, that you're the pip hunter, it was really the shark hunters month for Australian dollar
Yeah.
longs. We sort of emphasized it last month that it was a great time to find a dip to buy
Right.
in the Australian dollar, and right at the start of the month you had a dip. You had a dip early in the month again, and then after the Fed meeting, that was a great dip as well. That's kind of got us towards today. So I think you can see the screen there
Yes.
right now,
Yes.
Dale. Yeah, and it sort of highlights Aussie dollar in March, and I mean it was spectacular. It was the best
So
trade of the
if
month.
the
and it
dollar
was-
bears are going to come out in force, perhaps there's more left in Aussie, huh?
Well, and that it was sort of the trade last month that we talked about. Actually, March isn't seasonally the greatest month. It was a solid month. But what is exciting, if you're an Australian dollar bull or you're looking at this trade, is April. April is, I queue it up here now and sort of highlight April, and you see the average change at the top, and the 10-year average is by far the best month for Australian dollar long. So the trade in April in March was to sort of find a good entry point. You didn't want to miss the rally in case it came a bit early, and of course it did. But it's a spectacular month for Aussie dollar longs. I mean, it just blows away anything else on the calendar. You can see 8 of the last 9 years, it's up. The exception was last year, but even last year, if you remember, early in April, the Australian dollar continued to rally. Then it cracked about mid-month, and then obviously the wheels fell off the Australian dollar for the rest of the year. So it even started out as a good month last year, and what turned out to be just a terrible year for the Australian dollar. So that's a big one that I want to highlight. And it's not just the Australian dollar; it's all the commodity currencies. It's the best month of the year for the Canadian dollar against the U.S. or short dollar CAD, and by far the best month of the year for Kiwi as well.
Wow.
Again, it's part of the technical toolbox. So I'm not crazy about buying it here on April 2nd because it's had such a nice run up. I think
The
we're up
chart you had up kind of looked like a head and shoulders formation where we had a breakout a little bit above 91. So perhaps a pullback to that neckline might be an opportunity.
Yeah, I could just scroll back there so your viewers can see that. I mean, and you're talking about that neckline in January and February would cut it in the head, and in January inverted.
Right.
People have been talking about that for the longest time, and it became a bit of one of those patterns that it scared people because it was so obvious.
Yeah.
But here it is, it's working, and I think some people got faked out on that first trip in early March above 91. That's the nature of technicals and trading, and not every signal's a smoking gun.
Yeah, Mr.
But,
Market tries to shake out as many participants as possible before the move they're looking for happens. Then most likely without them. He's mean, Adam.
It is. You got to hang on for dear life. And anyone in an Aussie long, and sort of seasonal is something that'll give you that little bit of extra confidence you need to sort of hang in there when the market tries to shake you out. So maybe if we get that sort of dip, you had that big, so if you look at the start of March, I think 4 or 5 days up in a row there above 91, and then they got shaken out. So maybe we get that sort of same kind of shakeout here if we cut below 92, and that's I think a dip that I'd like to buy. Australian dollar, very strong one. The next one I want to talk about, and it kind of shows that the hem and haw you have to do with seasonal is the euro. Since the euro's inception, it's the best month of the year. You look at the last, it's sort of tailed off the correlation a bit in the last 10 years. And then you see 5 of the last 9 years, it's actually been down in those years.
Yeah.
And the average is still higher. And the years you're up, you're up 2-3%, but the down years are smaller. So I think with something like that, you might not want to put all your technical or all your eggs in that basket. But the good news, you can look at the ECB on Thursday. If they come out with something that's not so dovish, if you break above here 138, hold that 140, and we don't get too much jawboning from the ECB. I think it's going to be a good month, and that was one of our trades last month as well, because March is a very good month for the euro, and it was a good month for the euro. It put in, about a 1.5% gain. Again, it wasn't the smoothest ride, but from the start of the month, it was up, and it was really never down. If you go back to the start of March, and I don't have the chart here, but I think from when we talked about it, the lowest it ever dropped was about 15 pips. Mm-hmm. And, it was up, it was down, it was up, it was down, but it was never down. So those are the easier trades to hang on to, the ones where you're holding a profit.
Yeah, where you're not taking heat on drawdowns.
Yeah, it's nice to get a little bit of carry in some places as well. It's a good month for the euro, but the ECB is the big question, and I don't see it. I don't see the ECB hinting at a cut. That's just going to be, you're going to have to wait on the fundamentals and the technicals for that as well, because it seems very clear. I mean, the euro was rallying last month, and then the jawboning ahead of 140. It seems that Germany or the exporters in all of Europe are very scared of a euro above 140, and maybe as they should be. It's barely a recovery there at all, and they don't need the heat from the currency.
Draghi was effective in jawboning and saying he'll do everything in his power at 128 to stabilize the eurozone, and it was successful. And like I was talking to Jamie Coleman, and he said he was skeptical that Draghi could accomplish that at the bottom. So this time when Draghi is jawboning it, he thinks that he'll be successful. Your view is that he may not be successful in being able to jawbone it. A lot of people are looking at him as being omnipotent, but your seasonals are saying that there could be more pressure on him.
Yeah, well, I mean, if you look at the seasonals here, it shows that April's a very strong month, but May is a very, very weak month.
So buy in the euro, sell in May and go away maybe at above 140.
Yeah, maybe you get to. We're right around 138 here. That's still a decent trade up to 140, and then you have to watch it there again and see what Draghi says. So it's one of those trades where I wouldn't hang my hat on seasonals, because there's so much in the fundamental story that you need to factor in. I like Europe. I like a lot of things about Europe right now. It's recovering slowly. Stock markets, money's flowing into them. Safe haven flows are flowing into the euro more and more. Ultimately, what helped the euro at the bottom was that the threat of action, or the threat, could be followed up by action. ECB took some steps.
Right. So it's easier at the top. Yeah. So it's easier to talk up. It was easier to talk up the currency and take concrete steps than it would be to take it down. Is that what you're saying? Because
you would have to take the concrete steps, and I don't believe that they want to bring in negative deposit rates, or that they're capable of it. It sounds like, certainly, but everything that I hear, I don't think it's coming on Thursday or tomorrow. And the short-term trade is to trade that. If we get some bad data out of Europe in the next month or two, sure, they might want to take those steps, but right now it's just, I don't see it in the data, and I don't see it in the comments from ECB officials, and I don't see it in the technicals, quite frankly. So we'll, but you got to play, every hand you're dealt.
Adam, you've been very good in the oil market, in the crude complex, since I've met you, and it makes me think with what your view is on commodity currencies, and I think you said there's a bearish tendency in U.S. dollar CAD in April. Does that imply that this recent break that we've had in the energy complex could be a buying opportunity?
Yeah, it is. It's a very strong month for all the commodities. That it's a tough trade right now in oil. My confidence level isn't what it was. Okay. We had a nice run up above 105, and we were talking that the whole way down. Yesterday we did. It's a very choppy trade right now in oil, and I think you have so many supply issues in the U.S. with Bakken oil. Now we're in this sort of period where we're probably going to get a decision on Keystone. So you're going to see a knee-jerk reaction in oil on that. The seasonals are decent, but they're not that great in oil compared to some other commodities. Okay. It's more industrial metals. It's a very good month for. Copper. So, the first really half of the year is a good time for oil, and then it starts to slump. But as we get more into, to May and whatnot, it becomes less of a great trade. So I think if you can get a good level that you like in oil, it's a good time to buy. But it's not. I'm not banging the drum on oil right now. But one trade that it is, and I think a lot of everyone knows this. I know you're a bearish guy, and I'm not exactly enthusiastic about stocks at these levels. But April is by far the best month for stocks. And that's the next chart I have up is the S&P 500. The trend's even stronger over the last 10 years. Even in the height of the crisis, you look at 07, 08, 09, they were all good years in April. So it is, I think you can be bearish because once you turn to May, June, it becomes a lot weaker. So maybe you want to take profits towards the end of the month, but this is a great month for stock market bulls. Okay. And I think you can get that on weak data or strong data.
Yeah,
if you get some,
nothing,
softer
nothing hurts.
employment numbers.
Nothing hurts.
It does. You're going to talk about Fed keeping rates lower for longer.
Right.
If it's strong, it's strong, and you buy on that. And again, we'll see when some of the data comes out. But car sales yesterday were extremely strong, and that shows there's two sort of narratives that I think traders are buying into. And one is that we're going to have this snapback rally from the poor weather in the winter,
Right.
and that the car sales data do point to that, and that's a bullish trade for April. And it's sort of the other scenario that it's going to take a little longer for that money to come back, or that it won't come back at all. But right now that bull trade looks good, and I don't think you're going to see that in the employment numbers necessarily, because that comes second. But retail sales numbers, or maybe the ISM services numbers tomorrow. If we see that there, I think it's just great news for stocks. Obviously, we hit a record yesterday. Technically, if we can kind of get up a little bit higher, it looks like a buy as well.
You have numbers.
But
I know a lot of long-term bulls were looking for 1950, 1920 as potential fib retracement of the whole move, and to me, it's looking like what could stop it.
yeah, exactly. And maybe it rips this month, and then it starts to fade out, and we start to look at some of the risks of higher rates. Or I think profits are going to be poor for the winter. I mean, corporate profitability isn't great, and I think that's the ultimate headwind. But for now, if you want a seasonal trade, stocks in April, and just put those worries on the back burner for a month or two, and then circle back to it. And the best seasonal trade I have of all, and this is the sort of chart that makes a seasonal trader kind of drool, is cable. It's 9 years in a row, cable up in April. By far the best month. We're averaging over 2% on the month.
Wow.
It's like seasonals are like any technical. It's like a trend line. It's like a break over the 200-day moving average, or like a Head and Shoulders. It's a sign. It's a trend. And here there's the trend in cable, and it's spectacular in this month.
So 2% would take us where to 170.
Well, don't make me do the math,
Yeah.
Dale.
I need my flashcards. So
Yeah.
that would take us to
Yeah.
170 or better.
Yeah, that's right. And you know what? I've got the chart for cable here just to expand on as well, so we can look at that as I'm talking. But it's it's a good chart. It's not a great chart at the moment. You scale back a little bit. That's the 100-day moving average I plopped on there. That's been great support. Got a bit of a trend line. In mid-March, it was a bit of a scare. Down I think 6 days in a row there, broke.
Right.
Kind of started a bit of a downtrend, but it's kicked right back. 7 days higher. Just kind of consolidating the last couple. And so, and you look at the fundamentals, all the data has been good out of
The UK.
UK. It's just it beats. And the next step is from the Bank of England if we start to talk about rate hikes. And I think just some hints about rate hikes a little bit sooner than expected. And it's to the moon for cable. So if that happens, then 2% is a low estimate.
Yeah, I'm thinking that there's just a possibility of 163.40 first, but you're right. The trend is up, and I was just thinking there might be one more shakeout. That wouldn't disturb the uptrend at all. It would just correct the recent advance.
Yeah, that'd be nice. That's the things I'm looking for in a lot of these trades. Stocks, kind of want to dip to buy. It's a bit frothy. Aussie, very frothy. Canadian dollar, it's tough to buy the Canadian dollar this year. But Kiwi dollar, more than anything, really is tough to buy. But we're having a bit of a shakeout right now. So that might be one to look at, because it's been. It's just a classic old-fashioned trade. They're hiking rates, talking about hiking rates. The numbers are good. The story's good. It's just one of those ones where you're always looking for a dip.
Well, you never failed to disappoint, Adam. Insightful, and appreciate all the views and you spending time with us. I consider you a buddy and a friend and a contemporary in the FX world. Always enjoy talking to you, buddy. Thank you very much for joining us today.
Yeah, thanks so much for having me on, Dale. Still got that screen up there.
You go.
Trying to put
Got you.
I got my video back up.
Yeah.
Yeah, I mean, it's like I said, made a point on seasonals. It's something to think about the start of every month. April is especially a good one to test some of those theories against. You know, what is a little bit different this year is a lot of the correlations are broken down.
Sure
I
has.
mean, the risk trade, Australian dollar trade, you know, that was, you know, rock solid for years, and it isn't what it used to be.
Why is that, Adam?
Yeah, well, I think a lot of it changed with the U.S. I mean, it was the sort of post-crisis era. You know, the Fed talking about hiking rates, Abenomics in Japan, and it's a big month for dollar yen as well. I mean, what's going to happen with the increase in the sales tax? And hey, you know, so those are the sort of things I think that change the trend.
Yeah, I know. I'm getting a lot of tweets, people back on the bull train in yen talking 108, 110. And that would tie in with what you're looking for in equities. But when I look at the daily chart, all we really did was come back and take out the stops over that 61.8 level above 103.70. And even though there's still some pretty decent momentum, I'm not convinced about 108, 110.
Yeah, and I'm not convinced about the fundamental story either, to dovetail with that. Until you have the Bank of Japan talking about doing more, I'm not sure that people are going to have that kind of conviction. I mean, the market is still very long dollar yen. It hasn't done much for you this year. So I think if maybe focus on other things and you know, other dollar trades especially.
Yeah, there's always something, isn't there, buddy? That's why, you know, I tell people don't be afraid of missing anything. There's always something else.
Oh, that's the best advice.
You know, there's always something else, and you provided us with quite a few something else's for this month coming up, buddy. Thank you very much, Adam.
It's always a pleasure.
I'll drop the link on you later after LAR closes. It was a great
All right, send some of that San Diego weather this way.
Great interview, buddy. Thank you, Adam.
Cheers, Dale.